Active Investor here, bringing you another independent analysis. This time we're taking another look at ticker symbol GEVO. That's Gevo Incorporated. The chart we have here today is a 30-minute chart. Each candlestick on this chart representing 30 minutes of trading. And we're going to take a look at a lot of historical data here on Gevo, since there is a potential breakout coming. So this was what happened today. This area right here, let me just highlight this. This is all today's data. And you can see we swung from about 50 cents, the low 50 cent area, 50.08, so basically 50 cents on the money, just about, to about 60 cents. Pretty good swing there. It's up about 15% on the day. And if we go back, we've kind of been in this channel for a while. So I'm just going to kind of scroll the chart. You can see we did break above 60 cents here and capped out around 68 cents on the tip of those wicks. We had some resistance right around 66 cents. Now, if we go back a little further, you can see that we did just kind of channel once again between about 45 cents to 50 cents, and we channeled there for a few days. Let's see, 1, 2, 3, 4, 5, almost a week. We kind of channeled between 45 and 50 cents. Then we broke out of that channel and flew up from 50 cents, made that high of about 68 cents over a 2-day period, or actually a 3-day period here. This would be the area. 3 days, it went from about 47 to that high of 68 cents. And if we go back a little bit further, you can see we were just stuck under 60 cents. And we go back further, and this is where the initial run happened on Gevo. This is where Gevo really killed it. So let's kind of highlight this and take a look. So we ran from about 42 cents all the way up to 59 cents, 85 cents, 94 cents, $1.05, $1.20, $1.34, $1.60, $1.85, and made that high of $1.95. So Gevo absolutely killed it. And that was in the span of 2 days. 2 days there. One day from 40 to about $1.17, and the next day from about $1.07 to $1.95. So it ran about 200% in that 2-day period, maybe a little bit more than 200%. Now, if you take a look at our moving averages, we had blue, green, yellow, orange, and then red. And that's the perfect and bullish order that we want to see. That would mean the 10 period is above the 20 period, above the 50, above the 100, above the 200. And that is the perfect bullish order. If we scroll back over to where we're currently trading, you can see that order is actually coming up again. So let's highlight the data from today. This is all the data that had today. This highlighted area is today, Thursday. You can see the moving averages are starting to make that bullish formation once again. We have the 10 period on top, but then we have the 100 and 200 day periods converging there, the 20 period and the 50 period. So we're going to want to see those leg down. Now, if our candles start breaking out, we're going to see those moving averages continuing to return to that bullish order. So I'm going to put an alert at 60 cents, breakout potential. That's what I'm going to label that alert. So if we hit that area, I will be alerted, and I'll know that we could potentially break out. However, there might be resistance on the way up. Let's see where resistance might occur before that area. So we could say that there's intraday resistance right around 65 cents. Since we were denied right about 65 cents over here, and then over here, and we couldn't really hold 65 cents here, and once again this wick kind of getting denied at 65 cents there. So you could say there's intraday resistance at about 65 cents. If we go back, take a look at around 65 cents, would be right about here. Interestingly enough, this candle got denied right at 65 cents. So it's not a solid resistance area, but just keep in mind, if we do break out of 60 cents, we might have to break out of 65 cents as well before these averages really get into the entire bullish order. But 60 cents would be the start of the breakout. We did break 60 cents here, but it was very weak and we couldn't hold the support. So it wasn't quite strong enough. The bulls didn't have quite enough power, and that actually took a ton of volume. Look at the volume on those candles. The first few candles from today, and once again I'm going to highlight this area to make it a little bit easier to pay attention to it. At least it helps me out. So we had 1100, then we had 742,000 on that one, and then a few 100,000 all the way there. But then that candle, 2.8 million, 4.5 million, and then the volume literally just fell off, going back to 110,000, 17,000, 220,000, 52,000, 25, 38, 78, and 29,000. So the reason we couldn't break out is because all that volume occurred at once, and then it wasn't consistent. The volume was not consistent. We had a major push from 51 cents all the way to about 58 cents, and then it just kind of fell off. So we're going to need some volume. Let's take a look at the volume that occurred on that initial run. 7.8 million on that candle. And then on the way up over here, it was still, 300,000, 189,000, 400,000 on that one, 100,000, and then on those red candles, back in the million range. So, wow, this one actually had 25 million. So, in other words, we're going to need to see volume in about the million range for this breakout to happen. Like we saw here, 2.8 million on that candle. So if the volume comes in, we can definitely break out, but we're going to need that volume, otherwise we will probably fade off. Now if we zoom out, just kind of focus in on the overall area here, we have resistance at 60 cents. I don't have it labeled, but we did discuss the intraday resistance at about 65 cents. And then it's going to be 85 cents, 90, 94 cents, $1.05, $1.25, $1.34, $1.60, and finally about $1.84. So those are all the resistance levels on the way up if another breakout happens. And looking at the chart like this, you can see that there is a major channel between about 39 cents, let's just say 40 cents, and 60 cents. So a major channel between 40 cents and 60 cents. And we zoom in over here, you can see that we tried to break out here and we couldn't really hold it. Tried to break out here and couldn't really hold it. And once again, we tried to break out here and we couldn't really hold it. So if we do actually get the volume and break out and actually hold 60 cents, we can easily get to about 84 cents. But we're going to really need to get support at 60 cents and then break that intraday resistance at 65 cents. And then we can gap up to 84 and work our way up to the resistance levels that we saw way back over here. So those are the areas that I'm going to be looking at. I have an alert set at 60 cents, and I'm going to put one also at 66 cents. And those are going to be the main areas we need to break, and then we can worry about the rest of the resistance. But first, we got to break those. So that's what I'm going to be doing for potential day trade, gap up trade on Gevo. You guys know I'm more of a shorter term trader, so I have a shorter term outlook. Longer term outlook, I'm not really going to go into that, but there is a potential day trade, potential swing trade there, depending on if those resistance levels break. So just keep in mind where that resistance is, and keep in mind the 60 cents and 60 cents resistance we need to break, and we need to turn 60 cents into actual support in order to really break 66 cents, and then we can gap up to 84, well actually to 85 cents. So if you guys have any questions, leave a comment down below. Definitely still watch Gevo. It tends to get volume out of nowhere. If you look at these volume, rather let me rephrase that. If you look at the day's worth of volume over here, you can see that it kind of gets most of its volume in the middle of the day actually, which is interesting. A lot of stocks will get most of the volume right at the start and then fade off in the middle of the day. But Gevo really does get most of its volume in the middle of the day out of nowhere. So it's definitely the kind of stock you want to have alerts on, because you might be paying attention to other day trades and out of nowhere, Gevo will just spike up. So definitely keep it on the watch list. Definitely set alerts so that when it does move, you know right away. That's my advice. That's my opinion. And I hope you guys tune in for the next video. Have a good one.